Okay. So I'd like to thank everyone for coming today. I'm just going to start by doing some introductions. So my name is Will. I work for the Espc in the marketing team. We also have Claire Flynn, who is content editor for the Espc and also works with me in the marketing team. We have Craig Forster, who works with McDougall McQueen, and he's a partner there. And we have Peter McGregor from the Espc mortgage team as well. We'll be talking today and obviously taking your questions. So we've got through the introductions. Then we'll just kind of talk you through what we'll be doing today. Claire's going to be doing a run through of the property market, so the latest property market news. We're then going to move on to the pre-submitted questions, which you guys will have sent in when you signed up. So we've got a good breadth of questions there, lots of different ones come in, and then after that we're going to do the live Q&A. So you guys, if you're watching, you'll have a Q&A box. You can kind of submit your questions in there, and depending on how much time we've got, we'll try and get to as many as we can. I'll also be creating the questions, so depending on, sometimes questions will be a bit too specific, and in fact, if it is like a very, very niche question, I'd recommend just kind of reaching out to us and we can kind of answer that individually, but we'll do our best to answer as we can. So I will now pass along to Claire, and she's going to do a property market update for you.
Thanks, Will. Yep, so I'm just going to update you guys on property market activity over the last few months and where we are now. So obviously it's been almost 4 months since the lockdown restrictions on the Scottish property market were eased at the end of June. And in that time, we've seen a real surge in activity. There was a lot of pent-up demand. Obviously, the spring period would traditionally be a busy time for people looking to buy and sell property. So that was pushed back to the summer period. We've also heard reports from agents that they've heard from their people that are selling their home that lockdown kind of encouraged people to reevaluate what they really want from their property, and therefore made the decision to move. So that whether that's a house with more space or a house with a garden or things like that. So we've seen a high level of activity, and because at the start of October, we had had 3 months where the property market had been kind of back to normal. We were able to produce the first ESPC house price report since March. If you're not familiar with our house price reports, we produce them every month, and they're basically a roundup of key property market statistics and data from the previous 3 months and compared to the same time last year for Edinburgh, Lothians, Fife and the Borders. You can go onto our website at espc.com, click on the news section and click house price reports to read the most recent one, particularly if you're interested in what's been happening in the property market. So I'll just talk through some of the key headline stats from that, just to kind of paint a picture of what happened sort of from July to September. So in that time, the average property selling price was up by 5% compared to last year. We also saw that the average property selling price was up compared to the first quarter of 2020, so before sort of COVID-19 had impacted the market the way it did. But one of the kind of most notable stats is really the number of homes coming to market. So the number of homes coming to market was up 48% compared to the previous year. So that's a big jump there, which again, it's due to sort of that pent up demand of people not being able to sell, and then obviously the potential encouragement of people to move because they realised that the house they had wasn't fit for purpose. So that's been a significant surge, and that is obviously generally a bit of good news for buyers because more homes on the market means a bit more choice. In terms of the percentage of home report valuation achieved, that's currently sitting at 103.6% for properties in Edinburgh, Lothians, Fife and the Borders. So that's just 0.4 percentage points up compared to the same period last year. So not a massive jump, but a bit of an increase there. We have heard reports from agents that properties are selling well at the moment. There's high competition for homes, so homes are frequently being sold at or above home report valuation, and in some cases quite significantly above the home report valuation as well. And another stat just to mention is that the median time for a property to be placed under offer from July to September was 21 days. So that's actually the same as last year, so no change there, but it is still a relatively short amount of time. And And yeah, so those are some of the kind of key stats. I guess the main thing to highlight is that things have been very busy in the property market. There's been a lot of activity from both buyers and sellers. There's been a lot of speculation in the press about things dropping off in October or calming down in October. To be honest, and I'm sure Craig and Peter will agree with me on this, things are still very, very busy. There's still a lot of activity and much higher levels compared to last year. We have seen a slight calming in some online activity that we monitor in comparison to the main peak of activity in July, August time, but it is still significantly higher than last year. So we're still seeing, it's still a very busy time at the moment in the Scottish property market. So I think that kind of sets the scene a little bit. And what I'll do now is pass back to Will so he can start the Q&A part of the event.
Thanks very much, Claire. Yeah, it's really interesting numbers, and we'll probably talk about them a bit more from the pre-submitted questions. So the first three questions are actually more based on buy-to-let and lettings side of things. We obviously have a Espc lettings team, so I sent them across to them, and I'm going to be answering for them basically. So we are actually having a buy-to-let event in the next 2 months on November 26th. I wrote it down because I knew I'd forget. So if you do have any like more in-depth questions about buy-to-let stuff, that would be a really good opportunity to have a look at it there. So the first question, we had a few different iterations of this one, was how has the combination of new laws, COVID-19, etc., more short-term lets coming off the market, and not as many students coming to the city affected the buy-to-let investments. So Lettings came back with the rental market has continued to maintain a strong demand during recent events, and we have seen very little downturn, if any at all. Landlords have started to move across from offering their properties from short-term lets to more long-term lets, but this has been more of a steady trickle rather than a flood of these types of properties overwhelming the market. It certainly hasn't been a cause for concern. Often students will secure next year's accommodation long before they arrive in the city, but due to uncertainties, this was delayed. It meant that we had a deluge of students arriving from elsewhere in the UK and from overseas who had not arranged accommodation prior to arrival. This led to an exceptionally busy month in September. So that was the first question. The second question was, what would you recommend for a buy-to-let investment at the moment, a 1-bed or a 2-bed in the city centre? We are seeing an increase in demand for 2-beds. It may be because people are looking for more workspace. So obviously, if you're now working from home, you probably want to have 2 bedrooms, one you turn into an office, or looking to cut costs. So it could be that if they're wanting to share the space, you want an extra bedroom so you can generate some money from it. And the final buy-to-let one was, what are the taxes around selling buy-to-let properties, and do improvements offset that? What are the current guidelines if a tenant wants to move out as COVID-19 has changed these? So the taxes side of things, I'm going to pass across to Craig, but I'll answer the second part of that quickly. So this is about the kind of how has the regulations changed when it comes to COVID-19 and asking people to vacate a property. Notice periods have changed due to COVID-19, and those changes are in place until at least March 2021. The notice period will depend on the lease you have, either a short assured tenancy or a private residential tenancy, which is PRT, and also will depend on the reason for serving notice. For example, at the moment, if your tenants are on a PRT and you want to sell, you need to provide 6 months notice. And Craig, I'll pass across to you just to talk about the tax side of things.
Yeah, thanks for that, Will. I think, well, first I should say, being a solicitor, I'm not an expert on tax, but it's something that we often have to deal with. The recent changes to income tax and the treatment of buy-to-let properties centre effectively around 2 things. One, you now don't get full relief on your interest, which is staggered through over a 4-year period, and that's just about to be washed through at the end of this year. So that's not to do with selling, but that's just in terms of holding a buy-to-let property. If you're a higher taxpayer, I should say, it doesn't apply if you're a lower taxpayer. But the main tax that's affected sellers has been the changes to capital gains tax. And what effectively is coming into force now is if you sell or if you sell now, you have to report to Inland Revenue within 30 days the tax. You have to estimate the tax. So what that will involve is getting hold of an accountant and working through what your gain has been. There's a number of factors that go into that calculation. But it's important that you engage your accountant before you put the property on the market, because you don't have a lot of time to get that application into HMRC, and you want to make sure that you've got a rough estimate of what your tax liability is likely to be. It doesn't have to be entirely accurate, because you get catch up in the following January if you've once you've worked out your true figures, but you need to have a good understanding of what your CGT is likely to be at the point of sale.
Perfect, thank you. The next question is actually for Craig as well, this is a bit of a crystal ball question. So is it expected that prices will go down in the next 6 months / are we heading for a crash? This is a combination of a few questions, but I'll defer to Craig on this one.
Well, actually, funny enough, I was asked this in March. I think Paul Hilton asked me to give a comment on that, and I'd sort of staved off saying, well, look, I'm not sure what's likely to be, how long this lockdown is likely to last, but I think most people in property were slightly apprehensive that the property market would suffer. I'm pleased to say for all of us involved that, and rather than suffer, it's actually gone on again since lockdown. There's been a massive bubble that's burst effectively once buyers and sellers were allowed to put the properties on and people were allowed to view. And which has surprised most people in the market, that has continued and is continuing today. There's been a lot of activity. We're seeing closing dates where we're getting 20% plus above home report, which is encouraging. Not if you're a buyer, but certainly if you're a seller. In short, the answer, I can't see any significant movements in house price movements in the next 6 months, given the level of activity we've had. I think there'll be some seasonal adjustment, as there always is at this time of year. But I expect prices to remain fairly stable. What happens beyond that is anyone's guess, to be fair.
Yeah, I think we'd all be considerably more well off if we knew exactly what was going to happen. But I think it's from what Claire said about the numbers and what you've been saying, how busy the market's been there. It appears robust, which is good for everyone. Okay, so the next question is for Peter, and it is short and sweet. Is this a risky time to remortgage? And I think you've kind of interpreted that because it's quite a broad question, that one.
It is, yeah, it's quite a broad question. So is it a risky time to remortgage? I'm not entirely clear what they're asking there, but I suppose if we rephrase it, is it a good time to remortgage? Depends on your circumstances, and it depends on the reasons that you'd be looking to remortgage. Just now, rates have sort of crept up over the last 6 months from where they were before, but previously they were at a record all-time low. So whether or not that's just the lending market readjusting itself, and this is probably nearer to where they should be, and we've yet to determine if they're going to go back down to the record lows yet again. We'll need to wait and see on that. So reasons that you might want to remortgage, you could be on a variable rate. There are certainly better rates available for lower loan to value mortgage persons, clients. There are certainly lower fixed rates if you've got a good low loan to value. You might want to be releasing equity, or you might just want to fix a rate for a bit of long-term security. So risky, I wouldn't say it's risky. It is what it is today. We can't foretell the future. We couldn't have foretold the low rates that we recently had. We couldn't have foretold COVID, and as we are at the moment, it's really, if you're on a variable rate, you might be as well just thinking about locking in for just now. But certainly not a bad time. Everybody's circumstances are all different. As I say, there are good rates available for the low loan to values. You can usually get free legal work and free valuations as well from different lenders if your own lender is not offering such a competitive deal. So it's worth shopping about. It's worth speaking to a mortgage broker, clearly. And
like yourself.
Yeah, absolutely. Yeah.
Perfect. No, thank you for that. Okay, that was quite a broad question, but I think that's you've broken it down in a good way. Just to there's a lot of things you can do with a remortgage. So, and like you said, best to speak to someone about it rather than just diving straight in. Okay, so next question is, with the widely reported poor conditions of university halls of residence, have you witnessed any demand for HMO properties? So I'll start with Craig on that one, anecdotally, I suppose, from your side of things.
Yeah, no, interesting one. Actually, we haven't seen any significant change in HMO properties, either purchasing or selling, till now. I think actually probably a greater driver in relation to the condition of halls of residence is likely to be what happens to universities and how they deliver education. Some of the universities are closed to Christmas, some may close thereafter, and that's likely to have an impact because, generally speaking, HMOs are the market's driven by student lets, and if they are not coming back in great force or they're not required to attend universities, that might affect the HMO market more significantly than any condition of halls of residence, in my view.
Yeah, no, exactly. And I think, Claire, from the SPC side of things, we've not seen any a big demand. There's not been visible in the numbers anyway.
No, it's not something I guess we wouldn't really know, for example, if it was an HMO property, but I mean, we are still seeing strong demand for sort of flats in the city that would be more kind of typical student sort of accommodation in the sort of student areas. So we're seeing strong demand across the board for different property types.
Yeah,
so.
Yeah, excellent. No, thank you very much. Okay, so this is quite a popular question, and I've put amalgamated a few into this one, but has COVID seen an increased interest in people wanting to move to the countryside? And if so, how will this affect homeowners who are worried that countryside house prices might be increasing at a higher rate than their properties in the city? So I'll start with Craig again for that one, as you're on the front lines of this.
The short answer is yes. We've definitely seen an upturn in the rural properties. You have to put that against a background for a number of years it's been fairly stagnant. There's been lots of properties that sat for 2-3 years that have suddenly post-lockdown suddenly sold, and not just sold to one buyer. There's been several properties that have had closing dates that have sat for 2 or 3 years, which is unheard of in the city. So that's all good news for the rural property market. The flip of that, as we've said earlier, is actually the city centre market has also been really busy. So I don't think we're seeing one market moving to the detriment of the other. But I do expect a sort of longer term trend of people looking again at options, and rural options being one of them, subject to what we're going to talk about later on in the webinar. But definitely a long term trend that we think will continue for some time.
Yeah. And I think, again, from the SPC side of things, it's anecdotally, Claire, we've seen stuff like that, but nothing, it's, like you said, it's not at the expense of the other.
Yeah, I think Craig has actually summarised that really well. I would completely agree that's kind of what we're seeing. We are definitely hearing reports of, properties that have been on the market for a while in sort of more rural locations, selling now and selling well. So there's definitely sort of demand increasing, but again, we are also seeing strong demand for sort of city properties as well. So I think it is, there's not kind of one growing to the detriment of another.
No, perfect. No, thanks, guys. Okay, so next question. Again, if you can get your crystal balls out. Has Brexit affected the market with it coming into effect at the end of the year? So Craig, I'm going to defer to you on that one as well.
Well, we thought that was going to be the big question this year, but obviously, in fairness, I've not had one client even talk about it in the last few months. So we're not seeing any impact as far as Brexit is concerned. Now, whether that changes once it's through might be a different question, but certainly lead up, it's not the thing that we are being told that is at buyer or seller's minds.
Okay, yeah, and I think there has been probably more things, more pressing matters to worry about than Brexit, funnily enough, which I think if you'd said that to me last year, I wouldn't have believed you. But I think this question came in from kind of, I think it was a place of if they're wanting to buy from abroad, basically. And I think COVID is probably a bigger barrier right now than Brexit to stuff like that. Okay, this next one is for Peter. Another nice short one. How long will the 15% mortgages stay the norm?
So thanks, Will. So first of all, on a technical point, people talk about 15% or 10% or 5% mortgage. It's not actually a 10, 5, 15% mortgage, and that's actually the deposit they're referring to. So it's actually a 15% mortgage really is a 15% deposit for a mortgage of 85%. So likewise, with a 10% deposit, that would then be a 90% mortgage, and a 5% deposit would be a 95% mortgage. So with regard then to a sort of 85% mortgage, 15% deposit, if you like, lenders have, since the COVID impact, they have withdrawn from the higher end loan to value, or the smaller deposits, the 5 and 10% deposits. The reason for this, a couple of reasons. First of all, quite simply, it's due to demand. We've seen unprecedented demand since the easing of restrictions, both in the sales and subsequently in the mortgage market. And what we're finding is that the lenders haven't been able to cope with the levels of new business that have been coming in. And reason being for that is because they've got staff dotted all over the place. There's nobody in a central office. They're all working from home. So they're adjusting all the systems. Consequently, they've now got a backlog of work that they're actually working through. So because of that, they've one of the reasons they've tried to slow the business down, and by reducing the more risky element side of lending, if you like, they're slowing things down. And that kind of brings us into the second train of thought from the lenders, which is they are worried about the threat of house prices dropping. Now that's probably pretty unlikely to happen in Edinburgh, in our collective opinion here at the ESPC. But the lenders don't look at Edinburgh as an individual place, they look at the whole of the United Kingdom. And what they're thinking is perhaps post-COVID, once things start to settle down, prices may drop. If they've been lending to people with only a 5% deposit or a 10% deposit, these high loan to values, and then subsequently the markets do drop and prices do fall, you could end up with a situation where the lenders have clients in negative equity, and they really want to avoid that. This kind of scenario, if you like, we did see a sort of similar pattern to that back post the financial crisis in 2008. The lenders withdrew all the small deposit, high loan to value products. Gradually, though, they started to come back after a period of time, once things settled down. And once house prices had settled, I think we'll see that again going forward in due course. And it really only takes one of the big lenders to come back to the market and start lending at these higher loan to values, and then you'll gradually see a trickle, and then before you know it, normality will return. How long that's going to be, though, unfortunately, can't tell, I'm afraid. It's a sit back, wait to see.
Perfect, thank you. No, that's a really good answer. Yeah, I think it is slightly comforting, I suppose, as precedent that we did have the crash 10 years ago, and things did go back to so it's I think it can be quite daunting sometimes when especially if you're a first time buyer, thinking, oh, am I going to get a property? Yep. Especially with that higher deposit needed, and I think it's not all doom and gloom, that things may go back to how they were. Okay. So next one is for Craig. How does transferring ownership of a property between family, aka example would be parents to children, work, and are there any pitfalls that we should look out for? So this was about succession planning. So I'll pass it across to Craig now.
Yeah, thanks for that, Will. Actually, this is an interesting one. It's one that we are asked increasingly about, mainly in relation to trying to avoid care home costs. But it comes down to just specific circumstances. It's not a one-size-fits-all answer, unfortunately. Having said that, if I was to give sort of general advice, I would say the majority of advice that we give is that it's often not fit for purpose. It sounds a good idea, but actually when you look at the tax implications of doing it, if you transfer to your children, but you continue to reside in there, it's still counted as your property for IHT purposes, and the children, when they come to sell, they will struggle with capital gains tax because it's a second home, effectively. One of the other issues that we also deal with is in relation to flexibility. As you get older, people are living longer. They're actually generally better health. If you give away your main asset, given that you've probably worked your whole life to be mortgage free, it seems strange to give it to your children, no matter how wonderful they are. But there's an increase in equity release mortgages that a lot of people now are using to sort of fund help fund retirement. And if you gift your property away, you lose that flexibility. So yeah, it's something that needs a lot of careful discussion. It's not an easy answer. The actual mechanics of transferring the property is very simple, but often there's a lot more questions and answers required before you jump in there.
Yeah, a bit more nuanced than just sending it across, and what's best for the parent might not be what's best for the children, vice versa. Perfect, thank you very much. So next question's for Claire, and this is a pretty simple one, I think. But is the market slowing down, and does this mean it's a good time to buy? So I've kind of already spoke about this, but just to put like what kind of the numbers are telling us right now.
Of course. Okay, so yeah, is the market slowing down? I'll answer that first. So obviously what I mentioned at the start is not really. We're still seeing really high levels of activity in the market, much higher than last year. We have seen a slight calming in certain sort of online activity that we use to monitor like buyer and seller engagement on Espc, but that's just really in comparison to the real peak in July and August. But things are still very, very busy right now. And there's still, we're still hearing reports of homes being selling well, selling for above home report valuation, and going to closing dates and things like that. Is it a good time to buy? I mean, that really depends on your personal circumstances. I think it's the kind of question it's always you're going to ask yourself when you are looking to buy a property. But it really depends on, what kind of your financial status is and things like that. And yeah, so you kind of obviously have to look at your own sort of circumstances, work out whether it's the right time. In terms of like the market and what it's doing, I think a lot of people maybe think, oh, if it's slowed down, I might be able to get a sort of bargain or something, but as I'm saying, things are actually still very competitive. And also one good thing at the moment that's good for buyers is that there's a lot more homes on the market, so there's greater choice. So that's something to bear in mind, that if you wait till maybe a quieter time, there might not be as many properties on the market. So those are just a few things to consider. But really, when it comes to the question of whether it's the right time for you to buy, it's something that you need to look at your sort of personal circumstances in order to decide, and obviously seek expert advice as well to kind of help you make that decision from the likes of Craig and Peter.
Perfect, thank you. Yeah, no, that is a very tough question, so I'm sorry for throwing that on you. Okay, so we've got a few more questions from the pre-submitted, and then we've got a few questions that have come in actually from the live, so I'll try and get through them as well. So the next question was, due to COVID-19 and the amount of people now working and studying from home, what additional information are potential buyers looking for in regards to connectivity of a property? Is there anything sellers should be doing / investing in to their properties to ensure their properties meet the digital needs of now and the future? I thought it was actually a really good question. You can see by today we're doing something online, all of us here. So it is important to have a fast internet connection. And it's something that you maybe want to look at when you're looking at a property. Craig, I think you have seen, like you said, people moving to the countryside, and that's something to consider as well with regards to connectivity.
Yeah, no, definitely. I think it's an interesting question. It's one that, to be fair, hasn't really featured that highly to date, but I definitely think it'll be something that continues to draw attention, and sellers will be asked increasingly about it. Obviously, there's a number of websites you can visit now to get that information. I would, joking with my fellow panelists, biggest issue for me isn't the countryside; it's teenage children. So I've had one today to come off their own devices, but it's certainly something that I guess most house sellers will have to front up and tell about going forward.
Absolutely, yeah. I think it's and it obviously depends on your job as well, but like you said, family, all these kind of things, multiple people using your internet connection, what you're using it for as well. Obviously, like we're doing video streaming and broadcasting at the moment, so luckily, we've touched wood, we've not had anyone drop out so far, but those are the kind of things that if you didn't have a strong internet connection, that could cause an issue. And if you're looking to buy somewhere, you maybe want that to be sorted. And like Craig mentioned, there's websites you can check general speeds and stuff like that, and different providers will provide you with different speeds, but it's something to consider. Okay, so the last few questions of here, and we've had a few more questions come into the live Q&A as well. Is it generally better to have sold your property before bidding on a new property? We've heard from friends of their offers not being considered if they'd already sold. So, Craig, I'll maybe defer to you on that one.
Yeah, I mean, the short answer, yes. That's not always possible, of course, but I put my own agency, when we are faced with a closing date and a number of offers comes in, we do look at the circumstances of a buyer. If it's close and someone's got to sell and someone doesn't, generally speaking, we'll go with the person that's sold already. That's kind of an obvious answer. I think they also, we have had circumstances where we've taken a less offer, sometimes £5,000-10,000 less because of the certainty. It definitely puts you in a stronger position. That said, there's always been a nervousness, particularly in Edinburgh, about selling first because it might not be the property you want available, and people are always a bit apprehensive about coming out of the market. So it really just depends about your personal circumstances and what you view, but there's no doubt about it. If you've sold, you're definitely in the driving seat when it comes to
having the funds available is the best option. No, thank you very much. Okay, so that is the end of the pre-submitted questions. So we're going to go on to the ones that have been asked now. Obviously, the guys haven't had time to prepare answers for these ones, so if I'm going to sift through them, and if we can't answer them right now in full, if you just reach out to me or to the Espc, we can speak to you about them there. So the first question. Based on the current movement of the market, do you believe first-time buyers will have a better time entering the market once the mini boom slows down and reaches either a stable point or prices go down, or potentially wait till the end of the LBTT tax holiday? So, Craig, I'm going to give that one across to you.
No, I think we've sort of largely covered some of that. I mean, I think, as I said before, I think prices are going to be fairly stable, certainly in Edinburgh, till Q2 2021. I think if you were guessing, and it would be simply a guess, you're thinking that there might be some movement at that point. So obviously that will coincide with the LBTT relief unless they extend it coming to an end. So I think, I certainly, if as a first-time buyer, was nervous or apprehensive. There's, often in life, just wait. And it might be the sensible thing to do. But as Claire's also said, personal circumstances, you may feel that you just want to get in. It might be the right property for you. There's a lot of choice. You might be worried there's less choice. So there's a number of factors at play. But if you're only concentrating on price and value, that probably seems sensible. Q2 next year is probably the point where we're going to see some movement, if any. But I think anyone hoping for big price reductions is going to be disappointed.
Yeah. No, perfect. Thank you. So next one from James. Hello. Thank you for these webinars. Thank you for attending. Due to the risks created by the different processes, is selling in England and buying in Scotland as a single transaction too hard to be worth attempting, or too unattractive to Scottish vendors who will be buying the next place in Scotland? Now, we had a question last seminar about this. Be interesting, Craig, to see what you think about that. From the last question, it's complicated, but I don't know if you weigh in with anything.
Yeah, I think if I understand it, there's in terms of a single transaction, it's probably not how I would phrase it. But if you're saying you're going to be able to sell in England and buy in Scotland the same day, there's a nervousness about from Scottish agents dealing with a sale in England, and that's not just because of historical chip on our shoulders. Just the system in England is slightly different, and pinning someone to a date of entry becomes difficult. So in the main, most sellers try and avoid it. If there's a like for like in either Scottish sale, they will go with that. So anyone moving up, if you've sold first, just like I said earlier, that you're going to be in a much better position. If you try and time it on the same time, it becomes problematic, and you're probably giving yourself or put yourself at a disadvantage.
Yeah. Perfect. Thank you very much. Okay, so next one's from Jenny. Are house prices holding with the pandemic in Edinburgh? Is the level of interest still good, or is confidence dropping? I think we've answered that. It's still strong. So, at the moment, there's not been a big crash, and things still appear to be fairly stable, which is good. Okay, this one's probably for Peter. I've heard that lenders who were previously okay with it aren't currently considering properties above commercial units, pubs, restaurants, etc., and are also very reluctant to release funds with remortgaging. Is there any truth to this?
Not that I'm aware of, is the honest answer. Traditionally, some lenders are wary of lending above commercial premises. Some lenders just don't do it, depends on the type of business. But if you think about Edinburgh, if you think about some of the main thoroughfares in Edinburgh, Leith Walk, all the main thoroughfares, all the flats above all of these, on all of these streets, and they're all above commercial premises. And pretty much, I'm quite sure most of them will be mortgaged. In the current market, I can't honestly say that I've seen any withdrawal. It really comes down to the valuer's comments and what the valuer says in the commentary box on the home report, and that's really what lenders go by. But certainly, as far as I'm aware, the lenders that have previously lent on commercial premises are still doing so. And I don't know anything adverse to that, to be honest.
So maybe it's a historical thing rather than a current one. This is just
historically, as I say, some lenders are reluctant to live above commercial, and it depends on the type of commercial. There may be one or two lenders taking up on that slightly, but nothing market wide that I'm aware of. As I say, there are lenders that will lend, there are lenders that won't, and the end result is really down to what the valuer says. If the valuer says, I think this is a good secure property and it will resell in the future, and the lenders are most likely to lend.
Perfect. No, thank you very much. I've had one coming from Mr. Smith. Have you seen a reduction in first-time buyers since the hold put on the Scottish Home Fund at the start of the month? I think we're probably that's maybe too soon to tell. I don't know if anyone, Craig, if that's unless you've seen it already.
Yeah, I think it's, listen, there was a bit of a rush when they were told it was going to end. So naturally, anyone that might have been buying the next month have just tried to get in early. I think it is too early to tell, but I would anticipate it's going to have an impact. Actually, I don't know, but it definitely will have an impact.
And that scheme is coming back next year. So it's, if you are a first-time buyer, that will be available to you in the new year.
I could just say as well, actually, from the mortgage side of things, that we're still getting a healthy number of inquiries from first-time buyers.
Okay.
And before we had the First Home Fund, there was a healthy demand from first-time buyers, and that demand is still there even without the First Home Fund. But yeah, it's going to come back again in April, and that will certainly boost the numbers. But I don't see it having a huge detrimental impact, to be honest with you.
Okay, perfect. Thank you. Okay, so we've had two questions about one from a surveyor. I'm trying to put these two questions together in one, about basically like how much they can expect above market value for a property. I think, Claire, you mentioned earlier that the average was 20%. Correct me if I'm wrong.
No, sorry. The average, the home report valuation achieved is sitting at 103.6%, so 3.6% above home report valuation on average.
Right. Okay.
I will say that with averages, all the sort of statistics we use, like averages and things, that's across a whole range of different properties, and so it is very dependent on the individual property and circumstances, how much it is going to go, if it's going to achieve home report valuation, then how much it's going to achieve over or anything like that. But yeah, that is currently the average, and yeah, we are hearing cases at the moment of properties sometimes going quite significantly over the valuation, but obviously it can differ between different properties.
Yeah, I think that's the takeaway is like you said, the average is, it can be either lower or it can be higher, because that is the average. Don't listen to me, it's not 20%. I don't know where I saw that number.
I think that was one that I was explaining. We've seen that.
Right. That's. I mean, I should still be listening better.
Unfortunately, it's not the average, but
and even then, 3.6 is a fairly good thing to be having above your home report value. Okay. Okay. This one's maybe a little bit unknown yet. It's from Janice. Do you have any insight as to whether the proposed 5-tier COVID restrictions will include a level at which home purchase / moves will be banned? I think we don't know yet until those are released. I
was just going to jump in there. I don't think we've had any specific insight on that or further details or anything, but we do update our website regularly we were doing that a lot during the kind of lockdown when guidance and restrictions were changing regularly. And we do share, like, sort of when we have updated, we have a key sort of like COVID-19 page. We do share that on our Facebook page and through our email newsletter. So potentially worth following us on Facebook if you don't already. Just because then once we do get sort of further insight on those kind of things, we will update our website and share that.
Okay, perfect. Yeah, and that's yes, we are we're in touch with government whenever these changes come in, and we will try our very, very best to get kind of the information out as fast as possible, because we know that is something that really does affect the market. And if you're moving or buying or selling, really, really important to know. So far, it seems that the government are keen to keep that, the market moving, because it's very good for a lot of people, and it is being done very safely. So there's not been any evidence that there's been any, issues with COVID when it comes to house moves. So got a few more left, and then we can get going. So we've maybe ran a little bit long, but we have a lot of questions, and I don't want to leave you guys hanging. So how was the market last year this time? Does it usually slow down before Christmas, and when does it normally go up? So I think November, but I'll defer to Craig and Claire on this one.
Yeah, I'll jump in first, Claire. You can correct me, probably the best way. Generally speaking, November is when we see a bit of movement or slowing down. A lot of people start to, if they come to an agent, they might say, look, let's hold back until after Christmas. So naturally you see a shortness of supply. I think the last 3 or 4 years, Claire will correct me on the stats here, but we've seen a really strong January, February. In fact, it's probably the busiest time in terms of good, strong prices coming through. So, which, it used to be the typical summer months, but actually it's been earlier in the year. So I'd be interested to see what happens in 2021 if we get the same big jump again.
Yeah, I would totally agree with that. I think generally we do see a bit of a sort of, in terms of the stats, we see a bit of a generally quieting down around November time and then run up sort of Christmas. But yeah, we have noticed with like the start of this year and last year, we had really strong start in terms of property market activity in sort of January, February time. So yeah, I would agree with that. So it will be interesting to see what happens in the new year.
Cool. No, thank you. Okay. There's a few more that I'll kind of just blitz through quite quickly. So I think Alice asked what kind of properties are going for 20% over HR valuations. I think it just depends on the property. Occasionally there will be a property that really catches people's attention. It's kind of, it can be for any reason. It could be just it's quite unique, or it's in a really good location, or it's recently had a lot of work done to it. There's lots of different factors in for that there. So I wouldn't go into a sale either from a buying or selling expecting that. And like we said, the average is 3.6%. Do not listen to me earlier. And yeah, so I think there's a lot of things that can affect that.
Help out there, because I was the one that mentioned the 20, and gave you what they were. They were family homes, traditional builds in good areas, good schools, or some of the stronger areas like Portobello and things like that. So we're seeing that, and they're typically price range somewhere between 500 and 750. So this seems to be that, which might also help Marius Brennan's question about solicitor giving advice on the winning bids. And I think, just in fairness to any solicitor that does that, what we're often telling clients is it's not a question of winning, because actually there's a lot of times when people have won it, and a few years later, if there's a crash or correction, they often wonder why they won that closing date. So we're trying to be cautious and trying to give you the best advice we can. And often it's just personal circumstances. If you've got money and you've got a long-term investment and you want to win it, and this is the house you want, and that's important to you, then clearly people put in enough to take out the opportunity they might lose it, and that's why you get the higher bids. And typically the ones that go 20, we're seeing a lot of activity. They're not getting it by miles. There's a lot of generally bidding at that level for those types of houses.
It's a popular property that is caught people's attention for the same reason.
7 or 8 plus notes of interest, and that kind of generates in itself a bit of a feeding frenzy.
Yeah. Okay. So I think There's maybe one more that I'll give to Peter, just because you might understand it better than me, obviously, as you are the mortgage expert. If a property is on the market and my fixed term mortgage ends, is it safe to go with a variable for a while until selling my house and buying a new place?
I don't know if safe's the right word or not, but at the end of a fixed rate deal, you would normally revert onto the lender's standard variable rate. Standard variable rate will invariably be higher than the fixed rate that you just come out of. So your choices are: one, go on the standard variable rate and pay that higher premium, or two, fix into a new fixed rate deal. If you tie into a new fixed rate deal, then you're tied into that. You're going to have early repayment charges if you come out of that beforehand, so you're going to have to port it. If you're on the standard variable rate, you have entire flexibility. So as and when you sell your property, if that's going to be in the near term and you're planning to sell in the near term, my advice would be just to go straight onto the standard variable rate. Take that higher hit for a few months of the higher repayments, because you then have the entire flexibility in terms of paying off that mortgage, moving on to a new lender, new deal for your proposed onward purchase.
Perfect. No, thank you. And there's one more. I'm not too sure about it, but I'll pass that to everyone because I don't want to leave them by themselves. Has there been any shift in the number of lenders available for all-lit construction type properties?
Yeah, so I'll come in on that one. Well,
Cool.
it's pretty much the same answer as I gave to above commercial premises. Lenders that would lend to all-lit properties before, as far as I'm aware, still are, and the ones that weren't still aren't. So no shift that I'm aware of.
Okay, cool. And there's one more that's come in. If a property currently on the market has a home report dated March 2019, can I insist on them getting an up-to-date one?
I might try and help answer that one.
Yep.
I'm assuming that the person asking the question is a buyer. The general rule of thumb, if you put an offer in and it's accepted, you can ask and request that the home report's updated, and the seller do that.
Mm-hmm.
The seller won't generally do it just because you've asked. There's got to be a transaction or potential transaction on the back of that. So yeah, almost every seller will always have to update their home report if they're out of date. The last 3 months. So even if it was March this year, you'd be getting an updated home report.
Before the sale goes through. Yeah, perfect. Excellent. Well, thank you very much, guys. So thank you very much to the panelists, Claire, Craig, and Peter. You guys were all very, very good. Thank you to everyone who attended. Some really, really good questions. It's really good to see you guys engaging, and kind of, I think we've been doing these monthly, and there's a variety of questions coming in. We do have more events coming up, so if you do want to just subscribe to our Facebook, Twitter, Instagram, etc., we promote them all there. We're doing a first-time buyer and also a buy-to-let event in the near future. So if either of those things interest you, feel obviously come along and ask your questions. But no, thanks again, guys, and yeah, I'll speak to you all soon.